Catch up! All right, just got my monster. Can I get it? Yeah. Previously on Kimba TV. And so you guys know what I'm looking for, right? Me personally, I'm looking for longs. I've been looking for longs, right? So like nothing has changed, you feel me? For me anyways. And so, okay, so like if we're gonna be looking for longs, then what kind of levels? Well, you've got the RTH gap. Does that actually get filled during RTH? Good morning, yeah. How we doing, Lions? U.S. markets are opening in 30 minutes. How we doing? Who juicing? We juicing. 2 letters, one word, meaning of life. All right, well, 26 minutes open. Got the overnight low marked. Y'all good? So we really don't want to go that low. What are you guys spamming the GIFs for, huh? I'm trying to focus. All I hear is ah, and Corco freaking out. Yeah, let's see if we can keep moving up higher, huh? We're looking good. How we doing, chat? Pewudu says, where would you expect a bullish retest? You tell me. So, do you remember, this is last week, but remember when I said value area high, value area low, settlement? So, value area low, settlement, value area high. The value area high is beyond the halfway point between the settlement, right? So value, this is the 50% mark. Settlement is closer, which means that you really don't want to spend time or build value below value area high. Okay, that's why I marked the overnight low. So best case, like if it starts to pull back, which is okay because we have an RTH gap anyways. So you would want like a tick. All right. But don't just, there's 2 different types of people, Pewudu. There's one person that will just hear that and they won't really understand that, okay? The second person, next time they see a setup like this, they're going to be able to remember what I said. Okay? So it's not a thank you for me to just tell you right now. It's a thank you when you can figure it out on your own. And it's a thank you to yourself when you can actually recall. Okay? The only reason why I know all this stuff is because I've seen this shit thousands of times. Okay? So the real, are you learning, are you understanding is when the bullets are flying and you're able to make the same assessment next time without me. So don't just, hear what I said and then just walk away. Like really try to understand, right? So 19 minutes, this is where your RTH is right below the overnight low. RTH is right here. So it would be nice if we close the gap, swing fail, snap back out of value, and then we go. And then you can aim for all of these highs, right? Obviously going down to settlement would be bearish as fuck. So if anybody is thinking, oh, I want the, settlement bullish retest, you're doing it wrong. You don't want to long that. That's fucked. Maybe there is like a small chance that untapped point of control gets grabbed at the 7.5. But And it's still possible, but something like this is less than 10%. I mean, that's like you have a 16 against a dealer ace. That's probably not gonna be a good one. So yeah, I mean, that would be you probably don't want to go any lower than that, to be honest, if you're bullish. If we happen to lose settlement, 90. Let's go! Let's go! Let's do it! Juicing. Everybody load up that Litucci! Come on! Come on! Ham D-Rex says, are you guys longing or shorting? We're long from the 94 area. Yeah, we've been talking about that bitch for 2 weeks. So if you don't have a long from 94, I would just assume that you haven't cared to watch the stream for like 2 to 3 weeks. Yeah. So make sure you get caught up, man. These are things that are just dead ass simple. All right. Ham D-Rex says, I just joined this week. Hey, well, that's okay. Yeah, we're just taking it level by level, man. We're going to see if RTH gap is going to get filled. So right here, we mark the overnight low. We have levels to the downside, levels to the upside. And ideally, like if you're bullish, you should always rewind the organic stream and listen to everything that I said, because every time that I repeat myself like this, there is a chance that I forget to say something that I already said. So it's always better to listen to my organic thought process instead of when I'm trying to repeat myself over and over and over for the 8th, 9th or 10th time. But yeah, we're going to be seeing if overnight low can hold. We don't want to build value below value area high. Yeah, we're going to see if something like this happens. But yeah, it's all math, pretty straightforward. We're going to be paying attention to Boo Gammas. Let me know if you have any questions, but definitely get caught up on the YouTube. Get caught up on everything we've talked about so you're not behind, and let's math it up, man. What you have to understand today is that we have FOMC. Yes? So at 2 o'clock, we get FOMC minutes, and that will cause a little bit of a thangity thang, okay? So first things first, let's start with that and work our way backwards, okay? I'm just gonna generalizably ask you guys, do you think this is going to be bullish or bearish? Right? Okay. And there's no right or wrong answer, but I want people to be thinking about these things. Do you think this is going to be bullish or bearish? Right? You know how I feel about what I think it could be, right? But everybody should have like at least an opinion on if they think this is going to be bullish or bearish. Okay? The next thing that you want to do is identify levels to the downside and to the upside. Okay? So clearly we have funky lows and we have funky highs. So if you're looking, you still aren't in a long, and you're looking for a long, you've got value and you've got overnight lows and you've got VWAP and you've got fibs helping you out. If you want to short that 97.5 untapped naked point of control, we've been talking about 97.5 as your first level of resistance for quite some time now. Okay? So like on the smaller time frame, we're looking at 97.5, which is about $1,200 above price right now. And for the smaller time frame sort of support zone, we're looking at 95, 94.7, which is also $1,200 below where the price is right now. So just let it figure out which way it wants to go. Be prepared and be ready to go. If you start to spend time or value below value area high, then it's like a domino effect. If you start to spend time or build value below value area high, the probability of you revisiting the other side of value, which is value area low, becomes higher and higher. The way that price action broke out of value means that anything at settlement is bearish. This is one of those things where you do not want to try to long the 7.5. I would be thinking about shorting the 618 if it nuked through and bounced off of 886. So going back into RTH gap or settlement or value area low, that's all bearish, and that is not a long attempt. So the only long that you really have if you want to try to get in on the long train is the swing fail of overnight low, in my opinion. Maybe you would allow it to go to 7.5, but then I want to see even more shorts getting trapped. Otherwise, I'll see you at 91. So, you know, the levels from yesterday really haven't changed to the downside. It's always going to be 93.5 or 91.5, just like how we were talking about yesterday. So 93.5 already got tapped, in my opinion. Revisiting that is not another long attempt. I'm going to wait for 91.5 now. So if you're, you know, thinking of, if you're not in the long yet, you really like 95, 94.7, and then sweeping and then getting back above value area high. That's really your only option for today. Otherwise, you're going to probably have to wait for 91. What y'all think? What's FOMC minutes going to look like? Yeah. Chat, are we going to hit this 130? Bugatti! Keep a gang, let's go! Rect only says now for the bearish scenario. Bearish scenario would be this. Yeah, something like, I mean, that's why the 97.5 is so important. Yeah, like bearish would be that. Yeah, bearish would be like that. Anything like that. Just like how that is what we want for, right? This, losing that, the volume, that's always been like the case, right? So we allowed this because it cleaned it all, right? So, yeah, so just losing value, brother, whether to the downside or gaining it to the upside, and then obviously, you know, point of control. So not being able to get back above, that would be bearish. Turning that into resistance, that would be bearish. You know? And it might not even have like a bearish retest. It might just be spending time and building value.
Oh, snap, there's a
Hey! All right, let me see what the question is here. RNK, shout out RNK. Do you take into account the open expiration, IBIT, and Deribit expirations this Friday and next? No, not really. Yeah, so not really RNK. I would actually take like the ETFs more into consideration. So like for example, I think this is Pixel Perfect 7.5, if I'm not mistaken. Like that's great. So I would probably look at that more than the expirations. Where's my boy RNK? Did that make sense? So to answer your question, no. Days, okay, that's not too bad. That's not too bad. That's not too bad. So you know what I'm in right now and how I'm kind of looking at this shit. Manuchiki says, LOL, no. Okay. I'm in a long, small position because I wanted to get filled for more. But if you want to, Manuchiki, you could go back and watch maybe the last couple, watch starting from last week. This, and then this. All right. And so, basically, long story short, brother, we've been waiting for RTH gap to get filled during RTH. And we got that. So that got filled. Yesterday we were talking about 93.5 or 91.5. I would have loved the 91.5. Okay? So it's all there, and then for the last couple of days, including here, we talked about how I'm gonna be chasing. So that was the gap, like this. So basically, any longs, like halfway through is probably, I think, good. All right, so we got the RTH gap, and we'll just continue to see if we can build value higher and change structure. Okay, and it's really just about taking it level by level and day by day. You know, there might be a really crazy short opportunity at 97.5. You never know. All right. But what I like to do is I like to first identify levels. Okay. So in the morning yesterday, you can hear me talking about 93.5 or 91.5. Okay. We were ready for both of these levels. You can watch the highlights live, and we didn't get a swing fail, but we got a failed auction. And I guess what I'm trying to get at is once I identify levels, all I'm doing is trying to figure out if there's edge. And there's basically three types of edge that I always use. One is open interest. Two is divergence, okay? CVD or RSI. And then last but not least, I like structure. Okay? So open interest wise, I mean, we were watching this live, but we have about 100 million. Now it's 84, but yesterday we had 100 million in shorts trapped. Like they shorted 80 million right here. They shorted like another 30 right here. Okay, a lot of them, some of them got stopped out, especially the ones that shorted the bottom. Okay, so I love when longs get stopped out and we get bottom shorts. Okay, so that's amazing. And then, you know, we've been talking about this for the last couple weeks, but what is this? A higher high, lower low. So that's hidden bullish divergence, right? So I love hidden bullish divergence. Okay. So going back to what we were talking about here, open interest, check. Okay. Shorts, bottom shorting. Okay. Longs getting stopped out. Okay. So open interest, check. Divergence, hidden bull div, yes. Higher high, lower low. Okay. Check. And then structure, check. We had the failed auction on the 5-minute. All right, so identify the level, right? 93.5, 91.5, and then anticipate edge, have a plan, take it if you see it. No pussyfooting, easy money, Bugatti money. Not only have a plan on what you would do, but have plan A, B, C, so that you know if it starts to go quick, how far you would allow yourself to chase it, etc., etc. So it really just it's just preparation meeting opportunity. All right, and then for today, you know, you want to build value above value area high. If you lose it, the only thing that you would allow is to dip your toes in and then get the fuck out. All right? It's amazing that it's not even doing that. That's awesome. Let's go. Let's keep pushing. Let's keep pushing. Let's squeeze these hoes. You dig? If we get to 97.5 and all of these guys are already stopped out, then I might think about a head short. I want to get to like 98, 99, and these guys are still trapped. Oh my God. Then we Gucci. See you at 128, 130. You heard? Let's just be clear that we have FOMC minutes in about an hour and 23 minutes. So I've been in these situations before where I thought that I had a really good long, and then the narrative was bullish, but the market needed to wipe out all of the overnight, shorters or the overnight longers. And so I'm still gonna keep my head in a swivel. It would not surprise me one bit when FOMC minutes come out, we get a little bit of volatility. It actually goes back down, sweeps the overnight lows, fills that RTH gap, and then we go back up again. Okay? But I'm not here to predict the future. I don't know if it's going to be bullish or bearish. I know what the levels are that would make me look at that data, and then I know how to interpret said data. Okay, so for example, I don't know if value area high is going to actually hold as a bullish support zone. We might nuke through it. There might be something in FOMC minutes where the market doesn't like it, and it's not going to think that we're going to get rate cuts for March. Therefore, we start to spend time below value area high, or we don't snap out of it. And then I'll see, this bitch is going to probably go to 91.5, if not lower. So you got to be ready for anything and everything. And the biggest, most important thing is we don't get got. It's not about being right or wrong. I can't lose. Okay. Best case scenario, I make millies. Worst case scenario, I get like 40K because I get stopped out in tiny profit. So just being patient and disciplined enough to seize an opportunity where you can basically get a free roll, So it would be great if I don't get, got and I don't get stopped out or round tripped and I'm able to hit my home run. Awesome. But I'm not going to, cry about it if I get stopped out in tiny profit or, leaves me behind. And that's the most important thing. Sounds good? You really, to be honest, Manuchiki, if you understand human psychology, brother, I'm never going to be able to convince your subconscious. Like, have you ever been hella, liberal and you were arguing with a super conservative person, or you were super conservative and you were arguing with somebody that was super liberal, and you just knew they were not going to convince you or have you change your mind? Those things also translate over into trading. If you're subconsciously biased on the bullish side, that will always be the foundation in which you make your decisions. Doesn't matter what I show you, what I say, what I'm doing. Okay? So the most important thing is trusting what you see and doing what you think is right. And again, like, it really isn't about being right or wrong. It's just about having good risk management. So if you understand what the fuck is going on in this game, it shouldn't matter if you're long or short. It shouldn't matter if I'm long or short. The only thing that matters for both of us is that we waited and were patient enough and disciplined enough to have enough edge. So even if we're wrong, the edge should have bought us enough buffer space and buffer room to put our stop loss in profit. You know, because if you actually waited and had good confluence and you can't even get a 5-minute structure change, I think it would be fair to say that you interpreted the data incorrectly. If you took a long or a short and you can't even get a 5-minute structure change, which would be the trigger point or an opportunity to put your stop loss at break even tiny profit so you can't lose, then I think you got to work your way back even before, attempting another trade, and you got to put a little reprioritize the data that you're using, and that would be your juice. It might not be economical. I think, for me, 97.5, 97.6, that point of control that we've been eyeing up there is your first sort of level of resistance, right? And that's $1,200 away. And your overnight low and your value area high down there is also $1,200 away. We're smack dab in the middle, in between the next resistance level and the next support level. So, alrighty, but I am bullish bias until the data tells me to not be. And so if we start to spend time below value area high, bearish. If we get below settlement, hella bearish. And that's just the way that I would continue, move forward. I'm already in a long, so I would love to be able to get above 97.5. That's the next level of resistance. You should probably shave 5 to 10% if you're in a long at 97.5. So, if not more. But 97.5 would be a nice, great place to kind of take a little bit of a breather, turn that bitch into support, and then once we can get above like 99, the stop loss, on the shorts, if they haven't been squeezed already, should really get going. Okay, so it really matters on where these guys are gonna start to freak out and get stopped out. Inky says I pussyfooted and shaved 50% already. That's not pussyfooting. That's okay. You got to be honest with yourself. Did you emotionally react, or was that your plan? Because the idea of sticking to your plan, executing your plan, trusting your preparation is more important than luckily doing accidentally doing the right thing. So okay, so that's what you want to try to get it under control, Inky. And that's okay, and that's juice. Do you know how many traders still do not have the self-honesty and the self-awareness to be like, oh my God, I totally got emotionally got right there? Or just to be able to say that and have that awareness, you're ahead of 80-90% of the game. All right? But how you don't, if you can't stick to the planning and the preparation, that's your subconscious telling you, yo, I don't trust your shit. You don't trust yourself. So these are all different markers and thresholds where you can kind of test yourself and really see where you're at. But that's what we love, right? It really doesn't matter if you shaved too much or too early. Who gives a shit really about the one specific trade today or yesterday or tomorrow? It's really about the next 100,000, isn't it? So if you can do the right thing and do the better thing for the next 100,000 trades, you're Gucci. It's really hard to, I always tell people this, it's really hard to quantify or put a price or value on something that you learned. You really don't know how much that new thing that you just learned is going to save you. You don't know how much money it's going to save you in terms of potential losses that you could have had you not learned it. And it's really hard to pinpoint exactly how much juice you're going to profit off of knowing that, because that might be the small little detail that might allow you to take a trade or help you from not getting stopped out or adding when you need to or re-entering when you need to. So I was promised a long today. Fuck.
Not enough Latushi.
Hey man, it is what it is, man. But maybe it might come in tomorrow, but it's not really so much about like, do you get the long or not? It's about if it went below value area high, how it had to have snapped out of it, because going down there is not that Gucci. So the fact that it didn't even go down to value area high is fantastic. This is great. Again, 97.5 is still going to be an interesting level. You've got the RTH gap as well. How we doing, Lions? 30 seconds and then U.S. market close, all right? Give it up for Bugama. It did build value above. Yes, sir, Stiga. You think we get away with it, man? Or, I mean, at this point, going back to 91.5 would be hella bearish, so that's not even Gucci. It'll just be a matter of, does that RTH gap get cleaned, or do we leave that behind for later? In which case, that 97.5 kind of looks a little sus, right? Then there might be a 97.5 short, and then gap fill, and then long from there, and then go, you know? All right, ladies and gentlemen, give yourselves a round of applause, man. Fuck, we survived another day. Rafs is asking, Kimba, what kind of impacts we should expect on the crypto market when Macaulay time ends? It depends on where the gap is, for example, brother. So you don't really try to predict the future. Rather, you need to be able to interpret the data correctly. So do you know what a bullish ETH gap looks like? And do you know what a bearish ETH gap looks like? Have you been paying attention to those enough, you know, the last couple weeks to be able to have your own subconscious tell you, hey, you know, when it's a bearish gap like this, it's about a 70%er. When it's a bullish gap, it's about a 90%er. Have you been? So those are the things. One is, do you know what to be paying attention to? And then have you been paying attention, and can you remember what the probability is over your observations of the last couple of weeks and months? Does that make sense? So we're not going to sit here and try to say, hey, this is what we expect or this is what we're predicting. Rather, we know what mathematically and statistically what a bullish gap looks like, right? We know what a bearish gap looks like. You know where the RTH gap is. You know where the value area high is. And so you know where you would tolerate in terms of how low you would allow it to open. If it does go back up, you know how high you would tolerate it and allow it to open. So that's it. You would start with gap. That's why I'm going to kick it with you guys until and through Macaulay so I can see where the ETH gap is. And depending on that, you know, I can figure out how long I can take working out, you know, if I should do a quick circuit so I can, you know, swing by and pick up the food. You know, do I have time to sit at the bar and actually enjoy my steak, you know, so I don't have to get it to go? Because I'll usually, when I get like a steak to go, I'll eat it right at the bar, just the meat part, and then I'll hop in back home and take like the potatoes and the sides and the bread and eat that back here with you guys. But all of that kind of will stem on ETH gap. All right. And, you know, Do you understand that today we built value above yesterday's value? So it's bullishly trending. Okay, so if you go back and you listen to why I'm here, I'm basically just making sure I don't get stopped out on the long. That means that I'm thinking worst case scenario, I'm thinking that it could potentially go lower than a value area high swing fail. So just keeping an eye on that, you know. If we have a bearish ETH gap, then while I'm working out, I'm going to have to babysit this bitch and set some alerts. I'm hoping that I can go leave and go work out with a bullish ETH gap. And then that probably buys me, 2-3 hours. Okay. What are you doing, Rafs? Yeah, what I'm basically going to be doing, brother, over the next couple weeks, to be honest, is assuming that I get away with this 93.5 long. And I'm not saying that the entry is 93.5, but conceptually speaking, right? Because if this 93.5 long doesn't play out, then what's the next level that I'm thinking about? And then if that doesn't work out, what's the next level I'm thinking about? So it's level to level. And then also to the downside, right? Like we've got 97.5 blue line in front of us, 98.4, right? So I'm going to just be taking it level by level. And the edge and the data that I'm going to be looking at really won't change, you know? If we go to 91.5 and there's even more shorts and it's a regular bull div, no one should be surprised if I have a long from down there. You know what I mean? Now, if we get to 91.5 and all the shorts TP, then I don't know if I want a long that. I might wait for 90K for the SFP. If the 90K doesn't SFP, then we shall just wait for 85. If 85 doesn't hold, then it's going to gap fill the whole thing at 77. But either way, I'm going to be ready. And I'm going to be, what I'm really trying to do is I'm trying to finesse my way through FOMC for March. And I'm hoping that there's rate cuts. So the 93.5, the 91.5 long attempts, they're basically front running GDP and PCE because I'm hoping that those are going to be nice. And, it helps us get above 100. And then once we actually have Jerome Powell come through with rate cuts, then that should give us the opportunity to, make all-time highs and breach into the 120s and 125s and 128s. So on the higher time frame, I'm front-running a lot of stuff, I don't know if 93.5 is going to end up working. We certainly have a bunch of goofy-ass bottom shoulders trapped, So going back down there and giving them a chance to get out and profit wouldn't be like the most ideal since they're already trapped. All right. Pika Trolichi says, and what if GDP and PCE are solid? And then we're going to take it level to level. That day, we'll already know what the levels are to the downside and what the levels are to the upside. And we will anticipate. So we'll already be prepared. We'll have a plan, right? You know when the GDP and PCE dates are, my boy? Then we shall adjust. Yeah. And the other question, too, is do you know how significantly Jerome Powell is going to look at PCE to figure out if inflation is Gucci or Magucci and figuring out if he wants to do rate cuts or not? Unemployment is also going to be a big thing, too, right? So, regardless of what happens, Pika Trolichu, man, we're going to do it together. You with me? Longers, I'm rooting for you. Shorters, I'm rooting for you. Bulls, Bears, we're all Lions. Cut, Choya! Exclamation giveaway. More giveaways tomorrow. Love you guys, man. Have a great night. Peace, everybody.